Hey Billy, you may be wondering, Jim, why are you in the bathtub? Right now I'm referencing a movie called The Big Short, but what I want to talk with you guys about today is about something a bit different, which was a big short squeeze. So we want to discuss why American stock trading platforms have started to restrict trades on certain securities. We also want to understand why Chinese investors are starting to use stock trading apps in greater and greater numbers, despite many obstacles.
During the COVID-19 pandemic, people have had an unprecedented amount of time to just sit on their couches playing with digital apps. Now, one category of digital apps that's gotten very popular is stock trading apps that allow people to buy and sell stocks and securities from the comfort of their own couch. And this brings us to GameStop, a listed company on the New York Stock Exchange. Because of the company's potential failure, many hedge funds and other short sellers had shorted their positions on this company, assuming the value of the stock would continue to decline in the future. However, at the same time, some astute users of an online forum website called Reddit, on a particular forum called Wall Street Bets, started to take notice of the positions that were held by these hedge funds. So these Redditors decided to band together and buy GameStop stock in truly tremendous amounts. So as these online retail investors started to purchase more and more stock, it began to trigger a short squeeze, where the price of the stock began to increase rapidly. As the price started to go up, the hedge funds and other short sellers also tried to exit their positions rapidly in order to minimize their losses, basically creating this feedback loop that continued to drive the price of the stock higher and higher. But suddenly, in the thick of the short squeeze activity, these retail investors found they were no longer able to continue purchasing new shares of GameStop using the Robinhood app. But before we get into why, let's first understand a little bit about what Robinhood is. Before companies like Robinhood came along, if you wanted to buy a certain stock, you'd have to physically go to a certain broker, like Charles Schwab. You tell them you wanted to buy a certain position in a certain stock or security, and you'd be charged a commission on that transaction. But Robinhood changed the game because you no longer needed a broker. You could simply use their digital app to buy and sell stocks, and there was no commission assessed on the transaction, so you could buy and sell as many stocks as you wanted. So because of this new approach, they historically had been seen as disrupting Wall Street, democratizing stock trading, and basically putting power in the hands of individual investors, the little guy. So during the short squeeze activity, when Robinhood decided they were going to stop individual investors from being allowed to purchase GameStop shares, many of these individual investors decided or felt like it was a major betrayal. Robinhood basically claimed they were forced to stop this trading because they didn't have sufficient collateral. So Robinhood's excuse is basically that their hands were tied and they had to restrict these transactions, otherwise they couldn't continue operating. But Robinhood is just one player in this whole space. And let's bear in mind that in order to purchase shares on Robinhood, you actually need to either have a US passport, driver's license, or residential address. So how do people here in China trade stocks online? Let's talk about the situation on the ground when it comes to stock investment apps here in China. Now, it's not always simple for Chinese retail investors who want to buy stocks online. In order to purchase stocks online, you actually need to access foreign currency. Therefore, if you're a Chinese citizen without this offshore foreign capital, it might be very difficult for you to use RMB, renminbi, to purchase these same stocks domestically. These limits are even more challenging because Chinese citizens are usually restricted to about $50,000 per year per citizen in terms of the amount of money you can remit from RMB into foreign currency on an annual basis. Now, it's worth noting that there also is a program called the China-Hong Kong Stock Connect. So Chinese domestic investors could buy stock in listed companies such as Tencent, and investors in Hong Kong could also make investments in domestic companies like Maotai, for example. But if they do have this offshore capital in foreign currency and they're able to trade, what kind of apps and various tools are they using to do so? So let's talk about the key players that exist in this space. The first company I want to talk about is Up Fintech Holdings, and they're actually the holding company behind Tiger Brokers. So Up Fintech Holdings offers two key products. One of them is called Tiger Trade, and this is oriented towards domestic investors in China who are interested in purchasing securities. And this is a Chinese language app oriented towards those investors. They also offer another app called Trade Up, and this is oriented towards US users. So they actually have a solution for them, although this represents a relatively small portion of their total user base. And the unique point with Tiger and their solutions is that they're really targeting these Chinese investors. So if you look at the UI and a lot of the materials that they publish through the app itself, it's all done in Chinese language. So you're offering not just the stock trading functionality, but a lot of reporting and other useful information that's designed to help these Chinese investors make decisions about which stocks to trade in and which ones to invest in. Beyond the information, they've also built up a vibrant community of users who are passionate about trading stocks. The last thing that's worth noting with Tiger is that they have more of a focus on the US capital markets as opposed to other players. Futu Holdings has two apps I want to talk about today. These are called Mumu and Futu Bull. So again, they have Futu Bull, which is a product that's oriented towards domestic traders in China who are interested primarily in trading on the Hong Kong Stock Exchange. But they also have another product called Mumu that is oriented towards international investors outside of China. But looking into this a little bit more, there's actually some pretty cool things that are offered by Futu Holdings. For example, the trading hours they have open for traders on the platform start at 4 a.m. until 8 p.m., which is the longest of any of the players in the market. And they offer free level 2 market data to their users. And again, on Robinhood, this is something you're going to have to pay $5 a month minimum to get Robinhood Gold. If you get Mumu, you're getting this information for free. But despite these differences, all of these apps are offering basically commission-free or extremely low commission trading. It's taken power away from these brokers and institutional investors and instead put it in the hands of individuals. And as we go forward, this trend is going to continue. So these apps have basically opened the floodgates for this incredible volume of individual investors to enter the stock market and start making sales and trades. But before we go forward, an important caveat. Greater China Tech does not encourage or discourage anyone watching from becoming an investor or using any of these tools. Stock trading is risky, and if you don't consider things carefully, you could lose a lot of money. So, what does the future look like when it comes to these stock trading apps? So the first trend is about government regulation, and it seems possible, if not likely, that the US government regulators are going to implement some sort of legislation that allows them to exert control over the behavior of these stock trading apps. A second trend we're probably going to see is a reduction in short selling behavior from these massive hedge funds. It seems like in the future, hedge funds are going to have to find a way to conceal or even stop taking these aggressive short sale positions on companies. Because if they don't, it might cause another army of these Wall Street bets individual investors to go after or buy shares in these certain stocks, driving up the prices and causing yet another series of short squeeze actions in the future. A third trend to talk about is potential disruptions and risks of the global economy. Some people have speculated that the current activity in the stock market points to a bubble, an environment in which many stocks are overvalued, and like all bubbles, one that could potentially pop. So if you have companies like GameStop where the value is artificially raised simply because of this battle between individual investors and hedge funds, there's no actual real value being generated. So it's possible it could trigger something like what happened in 2008, where suddenly, again, you have all these bubbles in the economic environment that all explode at the same time. Are companies like GameStop the canary in the coal mine signaling something truly wrong in this entire environment? We'll see. And to you, a question for viewers of Greater China Tech: are you considering investing in US stocks or securities? If so, let us know in the comments below. As usual, thank you for watching. I'm Jim Field from Greater China Tech, and please subscribe. And if you're interested in more of this fintech, stock trading type of content, please also let us know in the comments and we'll consider doing more in the future.